All right, well, let's get this show started. I still see some people joining, but they'll have to catch up on their own. So thank you for everybody for joining our webinar today. We're going to be going over revenue expense deferral functionality in GP. It's a Friday, so I can't think of a better day to talk about something like that. So I know that's what I think of when I think of Friday. So revenue expense deferrals it's one of those functionalities in GP that's overlooked a lot. People don't know it's there very often. It's been there for a very long time, and a lot of people aren't using it. And it's a great little tool for doing your amortization. So that's what we're going to cover today. Let's flip over to the agenda slide. So real short agenda. Basically, I'm not going to keep you stuck in PowerPoint here. We're going to turn it over to Imran for a demo. But first, I'll just introduce ourselves, and we'll talk about what we do and do a little shameless plug. Then we'll give it to Imran, who's going to run the demo, and then we're going to go over our upcoming events, and then we'll have a Q&A period. So let's hit the next slide. So ADM, who we are, what we do. So there you see a picture of our office. We are getting ready for Halloween. I have to be honest with you guys and tell you I'm a little afraid to go to work these days because there's cobwebs everywhere and people jumping out from around the corner trying to scare everybody. We have our costume party coming up next week where we do a competition. Whoever gets best dressed gets a little prize. So we're all excited for that. But what we do, we're a team of people that have been living and breathing Dynamics GP for about 20 years. So we've been a Microsoft partner since 2002. I've been using GP, as I said, for 20 years before Microsoft even acquired it. Back in the days, it was called Great Plains. But basically, our entire company is built around implementing new functionality for GP, doing support for existing GP clients. And of course, we are the proprietors of GP 365, which is a platform that we've built in concert with Microsoft to bring Dynamics GP into the cloud and to add functionality in a software as a service model. So we've been doing GP for a very long time. We've got a group of talented, super talented people that are very passionate about the platform, and we love using and showing others how to use Dynamics GP. So without further ado, I'm going to pass the baton over to my colleague Imran. Oh, I'm sorry, I should have introduced us. So by the way, I'm Jason Williams. So I'm the GP guru here at ADM from the very beginning. And Imran is a senior functional consultant. He's been with us for, I think, about half a year now. And he's been doing implementations and support for GP. So with that, Imran, I'll pass it over to you and let you take it away.
Thank you, Jason. Hello, everyone. So today's topic, as Jason explained, we're going to go over revenue expense deferral. It's more of a training session and a demo, so it will give you not only the overview of the functionality, but it will give you insights on how to set it up. And it is very easy to set up. If you have used it in the past, that's great. But if you haven't used it, we'll go over not only the setup part of it, but I'll do the transaction within payables and receivables and show you the effects of this functionality. Now, most of the time, these functionalities are used when you have either prepaid of some sort of an expense like an insurance, or maybe you have an unearned revenue, you want to defer it over the period of time, and you want a system to apply it automatically. So let's take a look at how this functionality works. Now, most of you, if you don't, just wanted to let you know that I'm using GP 2016, which is one of the latest products from Microsoft. So if your screen does not look like what you're about to see, the deferral functionalities are pretty much the same. It hasn't been changed except the security part of it, which is quite a bit changed, but not as much. So let's take a look at it. I'll go to financial first, because in financials, you'll be able to set up the deferral and deferral profiles both. I'll tell you the difference between the two when we look at the windows. So under financials, if you go into your setups, now some of you may not have access to setup, so you may have to go to a person, maybe your controller or CFO or whatever the case may be. They will have access to setups, and you'd be able to or you would be able to show them how to set up these functionalities and they'd be able to set it up for you. Now, under setups, you will see something called deferral and deferral profiles. I will click on deferral just to show you how the window looks like. Now, when you open up the window the very first time, you will see the audit trail code prefix for ALTRN. This is the audit trail. When we post a transaction, the audit trail will always start with the ALTRN, so you can differentiate between the other audit trails like PM or GL, which will have different naming scheme. Okay. I wouldn't want you to touch this source document because it basically is an standard or a default audit trail code. So you would basically leave the changes as it is. What you can do is the next GL document number. If you think that there are too many zeros, you can decrease the number of zeros so that when you are looking at the report, it doesn't show up with a 15 or 16 digit correctors, right? Um, Default calculation method, there are a couple of them. So it depends on your deferral. Now, some of the deferrals, you may use it over 365 days, and some months have 31 days, while other months have 30 or 28, depending on the months, and it will calculate based on the number of days. What I do like to usually use a lot, and I've seen organizations use that quite a bit, is equal per period. So if you are buying an insurance for 12 months, a policy, most likely the premium will stay the same over the next 12 months, and it won't fluctuate based on the number of days, right? So you will, for the most part, you will use equal per period. Now, these are just the default settings. You may change it at the transaction level if you feel to. Automated post through GL. This depends on your company's process. Some of you may choose to have multi-level posting where it creates a batch for someone in GL to review it and post it. So any batches that comes from subledgers, it will do a multi-level posting. For the ease of use for this functionality, I will just leave it as yes. Auto post into close future GL periods. This is a good one because it will allow you to post even if your periods are created in the future and you have closed it because you don't want to utilize it, it will still allow you to post it over, in your future periods. And this is what you're trying to do, right? When you create the deferral. So it won't give you any issues or errors when you're posting it. What I don't like about this functionality is that some of the organizations don't like to post in the closed periods. So I would actually turn this off if it, um, you know, if in your company's processes or if your business processes does not allow um, posting to the closed periods because you've already printed your financial statements and you don't want anything going into the closed periods in the past. Okay. Sales series posting method and purchase series posting method. Um, for our demonstration, we'll use balance sheet. You can use profit and loss as well. Most of the time you use balance sheet. Profit and loss, what it allows you to do is allows you to add extra level of account to post the deferrals, which most of the organizations do not really use. What I've seen is that most of them like to have a balance sheet where you have a liability account or asset account created based on your deferrals. So if you're prepaying insurance or maintenance in the for the next couple of future years, you will have prepaid expense created in your balance sheet account. And under assets, you may even have something called unearned revenue, where you bill someone for the next 12 or 24 months for a maintenance contract, and you may have a liability account created because it would be unearned until you recognize those sales revenues, right? So we would use balance sheet for both of those. Void deferrals with original transactions. I'll go ahead and show you how to do voids. Now, I would rather prefer that if you're voiding something, you might as well void the deferral with the original transaction. It voids out completely cleanly. But if you're half a year through and if you want to void a transaction, you can change it to no, and you know first half of the year, the transactions have been posted, it would be untouched. Next half of the year would not be well, it would be voided basically. So it depends on how you want to use the functionality. You can test it out in your test environment and choose the option that works best for you. All user access refer profile. For the ease of use, we will use that, but I'll show you when you're creating a profile, you can um, give profile access to finance users. Um, like let's say, for example, AP, you create a payables deferral. You can give that functionality access to AP employee and not an AR employee, so they don't get mixed up when they're selecting the profile. So depending on the user access, you can create or give access to users depending on your, um, accounting or finance processes, and they will have access to deferrals based on what you provide them with. The last but not least, the setups that we look at is profile distribution account override options. So you allow them never allow override or always allow override and so on, and they would be able to override the distribution accounts depending on their level of access. And print posting reports. So I would like to have to view it and print it as well, and you can, choose the way you wanted it to. I'll go ahead and press OK to close our screen. Now, under setups, when you see deferral, you will see something called deferral profile. So what I'll do right now is I'll create a profile for you. A scenario is that I have a prepaid insurance. I signed up for a 12-month policy with an insurance company, and I want to go ahead and create. I made a payment of $12,000, and I want to go ahead and create that $12,000 12 months period deferral for the insurance. So I'm going to call it prepaid insurance. Okay. Right away, when you type it in, it will give you the options. Which module do you want to activate this profile for? So I'll click Payables Management just because it's a vendor and I'm making a payment to the vendor. Now, under Payables Management, you may have noticed at the distribution level, you have purchase and your payables when you do a transaction, right? I'm going to click on purchase because it applies to my expense account. So I'll select purchase for the expense. Let's talk about the deferral account. Now, the deferral account is usually your prepaid insurance account. So I'll hit the magnifying glass and select the prepaid insurance. Prepaid insurance. And notice that it starts with the one that shows up in my assets. Okay. Now, I do want to recognize it, that prepaid insurance by going or posting it to expense account. So I will have an expense account here and I'll just hit the magnifying glass and select insurance. And I found my insurance expense right here and I'll plug that in. So the way it's going to work is that naturally when I create a transaction, when I pay my my insurance provider, I will create a prepaid insurance transaction and pay to the insurance provider, and then I would let it post it or defer it over the next 12 periods. Now at the bottom it will ask you what would be your calculation method. So again, I'm going to select equal per period. Start date would be, let's just say my insurance starts on November 1st, but I signed up today, so 10 days ahead of time. And how long does it last for? So I'm going to go ahead and put, it's a 12-month policy. I'm just going to go ahead and put 12 months. For some of you, if you want to restrict user access, you can click on user access tab and select the users you want to give access to this profile. And when you give access to the user profile, let's say, for example, myself, you can select what you want the person to change. They can change the start date and they would be able to have access to the profile, but they might be able to change just a debit credit account, maybe the deferral account, a recognizable account, start date, and so on. So depending on how you want to set up your user access, allow access to profile and default profile as well. So quite a few things that you can do by providing people an access. I'm just going to click on clear. Okay. I don't want to make any changes, but I just wanted to show you the screen. So I'm going to go ahead and save it. And let's just do a transaction for an insurance company within Payables. Okay. So I'm going to hop over to my purchasing. Under purchasing, I'll see transactions. Now, if I bring it down to the bottom until I see my transaction entry, I'll select the vendor, and let's say my vendor is Ace Travel Company. Now, I'll put a description in: insurance policy, 12 months. Whatever the description makes sense to you, you can go ahead and put that in. I'll put a document number. Let's say the invoice number from the insurance was, this was a document number. If there's a PO number, you can put the PO number in. And my insurance policy costs about $12,000 a year. I'll go ahead and put that in, and I'll hop over to distributions. Now notice one thing: my purchase account right here, based on what I have on my account under my vendor ID, it shows up with a different account. But obviously I want to put it under prepaid. If I use a different account, and if I click on additional and click on deferral profile, okay, it will let me go ahead and choose profile, but it will tell me that this account is not the deferral account for the profile. So I'm going to go ahead and press OK, close it. I will actually change this too, because when you create a deferral, it looks at the account number that you're creating it for. So I'll go ahead and create 1410, and that's my prepaid insurance. As I showed you in my deferral profile, I'm going to use that. So I want my 12,000 to go under my prepaid insurance as a debit, and accounts payable as a credit. Now, after entering the account in, I'll do deferral profile. Under deferral profile, I'll choose prepaid insurance. Now, this time it took it because it knows that deferral account is correct. So it basically validates your deferral account. So there are less chances of user mistakes here. Okay. I'm going to expand this screen for a minute so you can see actually. So as soon as I put that in, based on my 12-month and starting date November 1st, it pre-fills all the amounts in it. And I'll monthly insurance premiums. So I'll put that description as I wanted to. Sorry about that. I think I pressed enter by mistake. Let me go back in. Okay. And I want to copy this over, and I can just cut and paste right into all of my other months, just so that when I look at my GL on a monthly basis, this description shows up. Okay. Now, one more thing to take a note of is that sometimes when you do deferral, first month can be a little bit less, and the second month could be more, and you would be able to change it depending on your deferral account and how you have set up. But on this one, when you do it on the fly, you'll be able to change it. But this one is based on 12 months equal payments. It will show up with a $1,000. If everything looks good, you click on allocate. Okay. Do you want to reallocate? You can just say yes or no. I'm just going to leave it as no because it already allocated for me. I'm going to close it and leave it as it is. Now, if you want to make any changes to the distribution accounts, everything looks good. You may see a tax distribution depending on if you are being charged tax or not. This was a simple entry, so I just wanted to, I didn't use any kind of taxes or anything. Okay, and notice that I am putting deferral against my purchase type. I'm going to go ahead and press OK. Okay, now as soon as I post this transaction, you will see the results of it. So I'll post. As soon as I click window, close. So this is probably what you're familiar with, Payables Transaction Posting Journal, which gives you the $12,000 one entry, prepaid insurance debit, accounts payable credit. As soon as I close this, a next one generates. and you'll notice something that it starts with a ALTRN, okay, with my audit trail code. And you'll notice another thing. And the journal entry is starting with November 1st. It is crediting my prepaid insurance and debiting my insurance expense for the next 12 months. So it does it so cleanly and so well that you don't even have to worry about doing the accruals and deferrals every single month manually. You'd be able to go ahead and take advantage of this functionality. Okay. And if I look at that, so I'll just browse over to that insurance expense account, 8020-00, and I'll show you. So if I go into my inquiry financial detail, and if I hop over 8020, okay, and if I look at from November 1st to November 30th, and oh, sorry, not December, okay, as you can see, it shows up with my $1,000. So I did some other testing transaction, as you can see it. If I click on my journal entry, okay, if I expand it for a bit, monthly insurance premium shows up. And if I click on my source document, it takes me to the detail level of where I entered the transaction. So it basically does everything for you, and it sets up the transaction very nicely in the future periods. Okay. Now, accounts receivable works exactly the same way. I'll create a quick accounts receivable just so you can, or for the unearned revenue. So for this, I'm going to go into my financials. I will go over and create a deferral account. And I'm going to call it unearned revenue. And let's just call that. This time I'm going to pick receivables, and under that, under my distribution type, I know that it's going to be sales, so I'm going to select sales. And for this, I will select my account for the unearned revenue, which is 2115. It's a liability account because even though we got the contract, the services have not been done or rendered. So that's why we want to put it under unearned revenue. And my billing recognition or my billing account or my sales account is going to be my 4100 account. And as you can see that I want to recognize my monthly payment or monthly deferrals against the sales account by removing or moving it from the unearned revenue into sales. Calculation method this time, I'm going to select equal as I like that equal, and I can select the same dates for 12 month period. Okay. Again, the user access applies the same way. I'm going to save this, close it, and this time I'll hop over to sales. Under sales, I'm going into my transaction entry. I'll select, doesn't matter, any errand fit customer is fine. I'll just put my, and this time I'm going to choose $6,000. So let's say it was a $6,000 revenue that I got. And under distributions, don't worry about the taxes. Under the sales, I'm going to go ahead and put it in because I want it to go into prepaid as a liability. So I want to put my liability account here. And if I expand it, it shows up as unearned revenue. Just because I haven't earned that revenue as yet, I'll go into my additional, click on deferral, select the deferral profile that makes sense to me, and it shows up with my 12 months deferrals. And once I set it in, I close it. Oh, allocate. And that is all done. I will go ahead and press OK. And once I post it in, you will see the transactions, the audit trails for the transactions. As you can see, this is just the the receivables posting journal. But if I just close this and we want to take that $6,000 to do it over 12 months, you will see $500 for the next 12 months. Okay, so not only can you can do it for sales, but you can do it for purchasing in both. Now, one more thing I wanted to um, show, which you can test it in your test environment if you get a chance. If you look at your deferral profile, when you set up a new profile, like let's say test profile, right? You can use sales order processing, you can use invoicing, and you can use purchase order processing. Some of you who have huge contracts using purchase order processing and you want to, like those are maintenance contracts and you want to defer it over a period of time, but in purchase order processing, just be, all you would need to do is that at the receiving level, you would have to select the deferral account. Okay, even at the purchase order processing level, when you create the item, you will go ahead and um, create the item against deferral account instead of putting it against a regular expense account. Okay, so that would be the only difference. Now, one thing that I also wanted to show you within this is, let's say if you want to, you made a mistake. Um, you thought that it's supposed to be deferred, but it wasn't supposed to be deferred, and it was supposed to be just a one-time payment and recognized it over just the first month or within that 1 month. And there was a mistake being made, and how would you correct it? So I'm going to hop over to purchasing, and I'll show you how to void the transactions. So voiding the transactions is exactly the same steps. If I click on void my open transactions, since I haven't made any payment as yet, it would still be sitting under my void open transactions. So I'll select my Ace Travel Company. This is where I created the transaction. I will change it to document date and select October 1st to now, because my transaction originated in October, that's why I'm looking for voiding the transaction that was in October. I'm going to click on redisplay. As you can see, there's a $12,000 transaction, invoice number 208408, which I deferred it over the period of time, but I want to void it because it was either wrong vendor, wrong company, wrong amount, whatever the case may be. I'm going to click on void here, making sure the void date and posting date make sense and they're both the same. I'll click on void. When I click on void, it will create a void open posting journal for me. I don't need to see my checkbook posting journal, so I'm going to cancel that and just take a look at how it shows up. So notice one thing, when you void the transactions, it will void it for you for each of those future months. And this is the best part about it. It voids it so cleanly that you won't even have to worry about it voiding, at the transaction level every month. It will go ahead and take care of that for you. And also, once it has removed all those periodic transactions in the future, it will create a voiding entry for that current transaction as well for the um, debiting the purchase account and crediting the unearned, not the unearned, but the prepaid account. So it will take care of that for you for the $12,000. It will credit the deferral and debit the payables account for you. Okay, as you can see that in the transaction, and everything gets voiding cleanly, backs out, and close that. Now there's one more thing that I still wanted to cover with this is that, let's say you don't have a profile set up and you wanted to do it right on the fly. How would you do that? So again, I showed you how to create a profile. Creating a profile gives you more control, but let's say if you didn't have time to create a profile and you want to defer a payment over a period of time, I will go into my purchasing, tag my transaction entry, and this time I'm going to select another vendor. Let's say Advanced Office System. Okay, I bought a piece of equipment for $15,000. Okay, and I'm just going, which needs to be deferred over the period of time because the usability of this equipment is going to be over the period of time. Okay, um, or a machinery or whatever it could be. Okay, again, I'm going to put my invoice number 11112233, and I'm going to hop over to distributions. Now, literally, I can change that to a prepaid account because I want to I want this purchase to go over the period of time. I can literally take any account right here, and let me just change it to, okay. And then I'm going to go into additional. So this time I'm not going to do deferral profile, but I'm just going to go click on deferral. Now, uh, on the fly, if you don't want to use the deferral profile, then the system will ask you what should be the start date and end date for that period. So I'm going to go ahead and say my start date would be October 1st to, it's a 15-month to December 31st. And what would be the deferral account shows up automatically, but what would be my expense account? And this time I'm going to use um, equipment expense or whatever the expense may be. Let me just go ahead and use any expense account if I can. Um, let's just go ahead and use export due to tax payable, or I have an idea. I can use the same expense account I used last time. So I'm going to use the insurance expense. Okay, never mind about the accounts. You guys can use any accounts that you guys have set up. Um, but this time, as you can see, oh, never mind. Equal period, recalculate. The window is not expanding, but as you can see that it goes all the way to December. Now let's say if it's not really December 31st, you want to have it up to August. If you want to change the date, all you need to do is hit recalculate. When you hit recalculate, it recalculates for you up to August 1st, 2018. So depending on how you want it to set up, it will create the entries for you. Again, you can just type it in however, whatever the references that you want. And let's say my first month was 1500 and next month was, you can actually choose any amount that you want if you want to. Obviously, it's going to show up with a difference and you will have to put the difference within the next months. But you'd be able to do this with different amounts if you wanted to. So you can see I put 65, so it shows up that a difference of 0.01 that needs to be allocated. I'm just going to change it back to 64. So this is how you can go ahead and do on the fly if you haven't set up a deferral. The deferral itself, it just gives you the extra security that you don't have it on the fly. Okay. Do you want to save changes? Yes. And when I press OK, when I post a transaction, again, it will produce me two posting journals. One is for the regular payables transaction posting journal for that $15,000. Okay, as you can see, the audit trail starts with a PMTRX, payables management transaction, and the next one is gonna create a audit trail under ALTRN, which is a code for our deferrals. And as you can see, that it's doing the deferrals for you over the next 8 or 9 months, actually 11 months. Okay, so starting from October 1st to um, August 2018. All right, so um, also sometimes if you want to go ahead and do a deferral and you wanted to find out what is my leftover amount at the end of the year. So maybe you've recognized some revenue and you wanted to see in a report what needs to be recognized over the next few months or over the next year. Under financial, if you hop over to reports, so if I'm going to go to the very end, there's a report called, there is an area called deferral. I'm going to leave my reports as a detailed, and I'm going to click on new one, and I'm going to say deferral report, okay? And I can choose this to do by, let's say I want to see what will be recognized until the end of this year and what will be remaining for the next year. I can choose a last posting date to show up to December 31st because my fiscal year ends up to December 31st, and I want to see what would be recognized until my end of this year versus next year. Okay, so I can select that and I can click on destination to show up on the screen, press OK, and print. As you can see for each one of them, okay, so I have, this is a document which was voided, so I'm not going to look at that, but look at this one. So I have recognized up to the end of this year, $4,090.92. So for this year, it will recognize $4,090.92. Next year, it will recognize, or the amount remaining, it will be $10,909.08. It gives you a nice report per deferral to show you what will be deferred at the end of this year or your fiscal year, and what will be remaining for the next year. Also, for the sales part, as you can see, that shows unearned revenue for this year is going to be 1,000, and the next year it's going to be 5,909. Okay, sorry, 5,000 and 1,000. So 1,000 for this year, 5,000 for next year, and the total it will show you at the bottom. You probably won't look at the total, but you would probably want to see for each of those deferrals what is being recognized for this year and what is remaining for next year, and it will show you that. So it's a nice quick report just for you to print out, and if your managers or whoever else needs it, um, any external managers or stakeholders, you'll be able to provide them with a nice report. And this is under financials, under deferral, where you would be able to print out reports for your remaining months and whatnot. Any deferral that you've created, you'd be able to see the report. Also, one last thing, under the reports, we see the detailed report. You would be able to print out in summary by profile or profile setup. So you can actually, when I click new, I can actually select which, if I go and select the test, I can select which profile I can create the reports for. So I can just select this one profile. I can insert it in and create a report for just that profile only. So for the profile, it gives you per profile report as well, depending on what kind of reports you want to create. Maybe you just want to create it for accounts payable deferrals and not accounts receivable, and you can do it by profile itself if you would like. Okay. So, sorry.
No, go ahead. Sorry, I thought you were finished.
Okay. So with this, I mean, this pretty much ends our demo. And if you have any questions, we can take care of these after.
Yeah.
Go ahead, John.
Yeah.
Oh, sorry.
So you made my Friday, Imran. That was fantastic. Thank you so much for that. I do see that there's been one question so far. If anybody does have questions in the GoToWebinar client there, you should see an area where you can write down a question and submit it. We'll go over those at the very end. Before we do, though, maybe let's go back to the PowerPoint. I think we're just going to talk about the next events. We're planning a special event. So We do these every month. Next month, we're going to be talking about Smart List Designer. So for those of you that are on GP 2015 or higher, I believe it was released in 2015, this is a tool inside Smart List that allows you to build your own and design your own Smart Lists, as the name would suggest. For anybody familiar with Smart List Builder, our friends over at E1 that make the Smart List Builder add-on for GP, it's not quite as powerful as that. Smart List Builder does a lot more than Smart List Designer does. But for those of you that are either on a budget or don't want to add any third parties to your GP install, Smart List Designer is a good alternative. So we're going to go over that in our next training, or our next webinar, sorry. And also, just to give everybody a heads up, we're planning to do a special webinar probably in the next 2 weeks with the release of GP 2018. We have our lab environment built up, and we're doing reviews of all the new functionality right now. So we're going to do a special webinar in about 2 weeks to go over the new functionality in GP 2018. So anybody that's interested in seeing that, just keep an eye on the website. If you subscribe to a webinar, you'll get an email from us about it. So feel free to join that as well. There's a lot of exciting stuff coming in this new release, so we want to go over that as quickly as possible and get everybody up to speed. Let's go to the next slide. So just another mention too on our website, which is at www.gp365.ca. We have an area for blogs. If you haven't seen them yet, you should take a look. We write them quite frequently about different functionality in GP, features. We do comparisons. We do frank assessments of some of the functionality, and whether it's good, bad, or ugly. I think there's one that's actually called that. So you should take a look at what we have on our blog section. It's great information and it's totally free. So feel free to go and browse around there. So with that, I think we'll flip to questions. Now I do see there's another one. So now we have 2 questions that have come up. Let me just bring these up here. So the first question, Imran, is, do I need to install anything for revenue expense deferral?
So revenue expense deferrals, it does comes with the installation. You don't have to do any other type of installation, although, and some of you may not have access to it, but you do need to go to, at the system level, you have registration. And under registration, I'm just going to show you quickly. There will be a check mark, I believe. I believe it's called revenue expense deferrals. So if this is not turned on, you will not see these functionalities. So some of you, if you're not seeing the functionality, it is probably because under registration, it has not been turned on. So if you advise your system administrator to go in and have it turned on for you, you'd be able to see those functionalities and set it up as you feel. Okay.
Great. And the next question, which I think I can field this one, is revenue expense deferral included in the starter pack? And the answer to that is yes. It's included in all versions of GP. The only way you wouldn't have access to it is if you purchased before the business-ready license transition happened in 2002, and if you didn't transition to the new licensing model, which is very, very rare. Back in the very old days when they were selling GP, this was an add-on, well, not an add-on, but it was a module that you had to purchase separately. But anybody that has converted to the new license model and is current on their annual enhancement plan would be having access to this no matter what version of GP you're running. So it is included in the package. And I don't see any other questions. So with that, I think we can give everybody back 14 minutes so that they can go and get ready for Halloween. And if anybody has any questions, of course, you can reach out to us. You can email info@gp365.ca, and we will definitely get back to you with any questions that you have. So thanks, everyone. Appreciate you paying attention. And Imran, that was great. Thanks so much. Okay. As I said, you made my Revenue Expense Deferral Friday a great one.
All right, thanks. Thank you, everyone, for joining the session.
Thank you. Bye-bye. Bye.